Good morning and very warm welcome to everybody to this fortnightly market outlook webinar. I am Devarsh and I am joined by my two colleagues, Subash and Siddharth. Good morning, Subash.
Good morning, everyone, and good morning to you, Devarsh Bhai.
Siddharth, how are we doing?
Good. Good morning, everyone. Welcome to the webinar.
All right. So without further ado, let's jump into the webinar. First, I'll speak about the global developments and local picture. The lot of things have happened over the last fortnight, so it is important to digest them and have a clear view what is likely next. Then my colleague Subash will come and he will speak about the markets from the technical perspective. And then Siddharth will share data and insights from derivatives. So let's start with the global markets. First about the American markets. So as you can see on the screen, my screen visible, right?
Yes, visible.
Okay. So the S&P 500 and Nasdaq has touched a new high. But if we see, it is only because of the growth stock and the artificial intelligence stocks. There, the enthusiasm over the potential artificial intelligence is driving the market. The inflation was flat for the first time in last 2 years, and that has led to a lot of enthusiasm about eventual rate cut. The 10-year treasury yield has come down from 4.4 to 4.2, but at the same time, the inflation moderating has an impact on growth. The unemployment was highest in almost a year. So now, after the June FOMC meeting, the projections are that the GDP growth will remain at 2% for FY25 and the calendar year 25 and 26. The core PC inflation will moderate from 2.8 to 2.3 and 2.0, and PC inflation will also come down to 2%. The unemployment rate will more or less remain here. So these are the latest projections about the US economy. And the FOMC dot plot, which is suggesting the likely trajectory of the interest rates. So earlier it was expected that by the end of the 2024, US inflation will be US interest rate will be 4.6%, but now average is now at median is at now 5.1. From this 5.1, it will go down to 4.1, a 1% fall in 25, and another 1% fall in 2026. So what was earlier thought of being here in 25 now has been pushed back to 26. Okay, what about the markets? So as you can see, the participation by the larger stocks in US is coming and coming down, the broader market. Earlier 85 stocks were above 200 day DMA average. Now only 68% of the stocks have come are above 200-day moving average. So the S&P 500 is at the all-time high, but the breadth is deteriorating. So this is a worrying sign, and that means that eventually we are looking at this rally in other stock, the AI stocks to come down, and it will spill into other stocks. What about India? So India, we had election results, a lot of volatility, but the end result is that we are going to have the political continuity. The same kind of government is there. More or less, the most of the ministers are also have the same portfolios. What is the message from the election? Is that the unemployment and the rural India requires a lot of attention. The BJP has lost many of the seats in rural area, and that's where I think the focus will be there in the budget. So the most important event, which is likely to come in the third week of July, around 21st, 22nd July, the official date will be announced. There the union budget is going to be announced, and that is going to be the most important event for India. And I'll also show some charts about what is happening in the markets. So first about the flows, the FI flows are moderating. Why India is at all-time high? Because compared to the global growth for a 24 as well as 25, India is going to be the fastest growing economy in the world. So as we move ahead, we are becoming fastest growing economy. As you can see, this is from the Franklin Templeton presentation which we had yesterday, that from number 5, we are likely to become number 4 globally largest economy by 26, and by 27-28 India will be the 3rd largest economy in the world. So because of our strong growth, we are going to surpass many countries like Germany and Japan eventually. So this robust growth is leading to robust earning growth. So from FY11 to FY21, we had a meager 6% growth. From FY22, a sharp acceleration in growth has come in, and it is expected that the Nifty earnings is going to grow 19% in this period. And that huge growth is attracting a lot of capital into Indian markets. So compared to the growth, we are not as expensive as others, but compared to our history, we are expensive. So historically, markets have traded at a 16 time one-time forward earnings. Now we are one standard deviation above. We are almost 20 times forward earnings, and that is keeping some people on tender hooks that markets are overvalued. But given this growth, given the improvement in ROEs compared to the past, this higher valuation is justified. Compared to the other markets, India was trading at a very high 120% premium. Now average India has been attracting 50% premium, and Indian market has now come back to those levels. So India is now fairly average long-term average premium compared to the emerging market. We are one-time standard deviation costlier compared to the past. But why there is so much enthusiasm in the market? Because now there is political continuity. The numbers which we were looking at earlier are still very relevant. So from FY 2015, we have seen that the corporate balance sheet is at the best they have ever been in last 15 years. Lowest corporate leverage, so banks can easily borrow to grow. Total credit of household is quite low compared to the globe. We are even lower than the average emerging market and much lower than the global markets, developed markets. So that suggests that the Indian financials are likely to have the ability to lend it to corporates, ability to lend it to retail households, and that's why financials are the banking and financial is the place to be. That's where we are going to see huge growth. For rural consumption to boom, government will have to spend money on villages, and that's where the higher GST collection and higher RBI dividend will come into effect. Because of that, they have the money to spend, and that will not affect the fundamentals of the balance sheet of the government of India. That means government is going to have good schemes for rural India. They will have good scheme for spending that will affect the growth from villages. What sectors are looking attractive to us? So apart from the banking and financial, which is going to lead this market higher, the commodities are going to be the one which is going to lead the markets higher. So now let's look at the performance of Indian markets. The global markets over the last fortnights have been flat. Only the artificial intelligence and technology stocks of Nasdaq has surged. All other markets have seen correction. Compared to the Nasdaq, Indian markets have also performed remarkably well. Post-election, we have seen that the markets have rebounded, and now we are at the all-time high. And compared to the Nifty and Sensex, mid-cap is almost 50% higher performance, 4 and 6, and even the small case is double of Nifty and Sensex, for 8% compared to the 4%. Same is the case over the last 1 month. So in between there was an extreme volatility, but month and month and fortnight over fortnight, markets have done remarkably well. Smaller the stock, better the performance. Which are the sectors? So as we have been pointing out, real estate, auto have been one of the best performers, while banking and PSUs have been underperformer. Now we feel these are the sectors which will come back. PSU have already come back. Banking will make a move now, and auto may actually underperform. My colleague Subash will point out why these stocks are looking little overbought and little stretched in the near term. Real estate is continuing to do well. So this is the situation from the Indian markets and the global setup. Now I'll invite Subash to carry forward. Over to you, Subash.
Yeah, thank you, Devarsh bhai, and good morning once again to everyone. So I will be giving a technical view on the market for the next 1 to 2 weeks. So is my slide visible?
Yeah, it's visible. You need to put it in the full screen, the last button. Yeah, slideshow.
Slideshow. Okay.
Go ahead.
Yeah, so it was a quiet trading week in terms of price action for the Nifty. Nifty traded in a narrow range, but the bias was positive because market breadth was positive in all the 5 sessions. Nifty finally gained 0.75%. This week saw a decline in volatility compared to the previous week, which was when the election results were announced. So volatility has come down. And if we look at the daily chart, we can see that the Nifty has bounced back strongly from the 281 levels, which is close to the 200-day EMA on the election results day, and it has bounced back last week quite strongly and taken out the lifetime highs in the process. This week it was trading in a narrow range. So the trend continues to remain up on all time frames. If we look at the short term, intermediate, if you look at the weekly chart, intermediate trend is also up, and of course long term trend also remains up. So this is a good sign for the trend to continue. 14-day RSI on the daily chart too is in rising mode and is currently at 61.41. So it is not overbought, which suggests that there is scope for more upsides in the coming 1 to 2 weeks. Looking at the sectors, most of the sectoral indices ended with gains this week. Top gainers were the realty, PSC, CPSC, media, infra, auto, PSU banks, energy, pharma, Nifty and metals. Top losers were IT and FMCG, which indicates that money was flowing out of the defensive sectors and into the other sectors. If we look at the charts, we can observe that all the major sectoral indices remain in intermediate uptrend. However, long-term charts of certain indices like capital goods, PSC, CPSC, auto, infra, and PSU indicates that the 14-quarter RSI has crossed the 83 levels. So if we look at the auto chart, which is of a quarterly time frame, we can see that the index has run up very sharply over the last 1 year, and the 14-quarter RSI is now above 83 levels. So it is definitely in overbought territory. And from an investment perspective, risk reward is not favorable. So maybe from a trading perspective, we could see further upsides in the short term, but we are not recommending long-term investments in this sector. And the similar is the case for other sectors which I pointed out, like capital goods, CPSC, infra, and PSU. All these sectors are overbought on the longer term charts. Sectors like IT and FMCG are showing weakness, indicating that money is currently flowing out of the defensive sectors. If you look at the CPSC, again, the weekly charts, there was a correction last week, but it has bounced back. So though the long-term charts are not very attractive, but on a weekly time frame, we could see some bounce back, further upsides in the coming 1 to 2 weeks. IT index, as I said earlier, is correcting and could continue to consolidate for some more time. Bank Nifty is trading in a narrow range, so it is looking good. There are more chances of an upside breakout, and if that happens, it could go once again towards 51,000 levels. So coming to the outlook, Nifty has recently bounced back sharply from the 21,281 levels and erased all the losses seen on election results day. So index remains in a short-term and intermediate uptrend. It is now consolidating in a range between the 23,200 to 23,500 levels. So a breakout of these levels could see the Nifty targeting new life highs of 23,950. Given the positive market breadth and support from broad market indices like mid cap and small cap, and also the fact that most of the sectoral indices are in uptrend, the odds do seem higher of a breakout at this point of time. On the downside, crucial supports to watch are at 23,200. These levels coincide with the previous swing lows. So as you can see on the daily chart, the recent swing lows are around 23,200, and this also coincides with the highs seen on the election results day. Roughly coincides, not exactly. So they are crucial supports, and in case they are broken, then we could see a short-term correction, which could take the Nifty towards 23,100 to 23,000 levels. This is the small cap index weekly chart. It has broken out this week to a fresh high, and 14-week RSI also is climbing up. So, and the moving averages have not yet given any negative crossover. They are still in rising mode. So that suggests that uptrend could continue for some more time. So coming to our conclusion, we remain positive on the markets, and we believe that Nifty could rise to new life highs of 23,950 once it breaks out of the immediate resistance of 23,500. Broad market indices like mid cap and small cap continue to outperform and remain in uptrend. And also, given the positive market breadth and the fact that most of the sectoral indices are in uptrend, we believe the odds are higher of a breakout on the upside. Crucial supports to watch for a short-term reversal are at 23,200, and in this scenario, the next downside support is at 23,100 to 23,000. Now that's all from my side. Now over to Siddharth for the derivative view.
Yeah, thanks, Subash. Can you? Yeah, my screen is visible.
Yes, visible.
Yeah, hi, good morning. So I think this is the Nifty chart of last 5 sessions. If you see that on the Monday itself, Nifty has rose, and after that, it has almost moved sideways. Where you can, if you see the comparison week on week basis, Nifty has risen by 0.6%, and where open interest has increased by 4.3%. And its PCR is also around 1.31 level. So this is the open interest chart in yellow color. So if you see in the initial Monday or Tuesday, the open interest was higher. After that, it has reduced, but again it has risen, and now currently up by 4.3% if you compare week on week basis. If you see the PCR also, PCR has come down to up to 0.70. From that level, it has again bounced to 1.31 level. If you see this IV has also initially IV is initially around 15 level, and it has come down to 11.30, which suggests that the option premium has come down and the volatility is also reduced. So in coming sessions also we can see a lower option premium, and if it reaches that 22,500 level, then we might see increase in IV again. But until it is holding that 22,500 resistance level, we'll see that in call option, put option, where the maximum open interest put call ratio is built. So this is the Bank Nifty chart. Bank Nifty also on Monday it has risen. After that, Bank Nifty has also moved sideways. If you see week on week comparison, it has risen by 0.2% on weekly basis, where open interest has decreased by 6%, which is suggesting a covering of short position. The PCR is currently at 0.98 level. Whereas Nifty PCR is around 1.3 level. So 0.98 level, which is very comfortable. This is the in yellow. You can see the open interest chart, where it has actually open interest has decreased gradually, and towards the week it has closed below 0.6%. This is the IV chart. IV has also come down in Bank Nifty, where from 15-16 level it has come down to 10-11 level. So option pricing has also reduced due to that. So now we'll move towards that Nifty put call ratio. So if you can see, Nifty has closed around 23,500 level, near to 20,500 level yesterday, where we can see a maximum call rating followed by 24,000, where the maximum call rating has already happened. So this range, if Nifty moves cross above that 20,500 level in coming session, we gradually see Nifty heading towards 20,800 level, followed by 23,000, 24,000 level at the maximum call rating. If it is not able to cross that 23,500 level, which is a resistance level, we can see Nifty is correcting towards 23,000, followed by 22,500 level. Whether at 23,000 we can see almost 18 lakhs of open interest, and on 22,500 almost at 17.19 value terms. Next to the Bank Nifty. Bank Nifty is also close around 50,000 level in yesterday's session, where the maximum call pull rating is already there. So followed by 50,500, which is the next maximum call rating is already happened, followed by 51,000 level. So gradually, if Bank Nifty able to sustain above that 50,000 level in coming sessions, then I think we can gradually see Bank Nifty heading towards 50,500. Ultimately, 52,000 has a maximum open interest. We can see Bank Nifty will head in coming sessions if it is holding that 50,000 level. And on the put side, 49,500 and 49,000 has a good support level. So we can expect if Bank Nifty face the resistance around 50,000 level, then we can expect a minor correction towards that level, where the new buying interest may emerge. Now we'll move towards the FI long to short ratio. If you see that chart, so gradually after 13 May, it was made a low of 0.15, and gradually it has risen and to go towards 0.95 level. Next is sectoral open interest data weekly. If you see all those sectors which are in positive, and where we can see a long build up happening, except FMCG where the short build up has happened, because if you see that 2 weeks data, old data, where FMCG was only performing and other sectors were coming down, but in last one or 2 weeks, most of the sectors have come out, like capital goods, cement, finance, chemical, which has seen a large position built up. If you see the heat map of last week, where the Siemens, OFS, Dixon has seen a long build up, whereas Godrej Consumer and Kotak Bank and Dabur, which has seen a long unwinding. Short build up was seen in Marico, which is again FMCG, Coforge, IT, then Granules, Hindustan Lever, which is again FMCG sector, and short covering was observed in Bharat Forge, Concor, and Phenoms. Yeah, I will now move towards the outlook. So basically, long build up was seen in Nifty future on weekly basis, where the highest call option on interest is around 23,500 by 24,000. Put rating is around 23,000 level, followed by 20,500 level. So ultimately, if it is not able to cross that 20,500, then good support lies around 23,000 Nifty level. So unless and until Nifty cross that level, then trader can start building new long position. So watch for 20,500 level in coming sessions. In case of Bank Nifty has a resistance around 50,000 level, and the trading range for the Bank Nifty for the coming weeks is around 49,000 to 51,000. 50,000 currently it is. So if it is sustaining above that 50,000 level, then we can gradually expect that Bank Nifty will move towards 51,000 level. In call rating also 50,500 level, followed by 51,000 level, where the major resistance lies, and in support level, which is at where put rating has already happened around 14,500 level and 49,000 gradually. And mid cap and small cap indices basically continuously outperforming, and we may expect that this will continue to move higher. So this is another point and figure chart. Basically, this is a Nifty point and figure chart where we can see a 45-degree line currently continuously moving up. So now, if you see that, if you see that 20,000 to 300 level is a trend reversal level for the Nifty. So if Nifty sustains above that 20,300 level, then we can expect a continuation of move. Otherwise, we might see a correction of 300, 400 point in Nifty, which again lies around 23,000 level. So ultimately, for a long-term trader should watch that 20,000 a good support level. If it is crossing and reaching that 20,000 level, then minor correction may start. So for a long position, we're suggesting that keep a stop loss of 20,000 level and continue to hold positions. Yeah, that's all from my side. Go to Devarsh bhai.
Okay, is my screen visible?
Yes.
Yes, visible.
Okay. You can see the retail research performance May screen, right?
Yes, I can see.
Right, okay. So now let's see how we have done over the last 1 month. So for the April and May month, we have been able to close 28 calls, out of which 24 were positive and 4 were negative for the fundamental performance. So 85% is our 85.7% is the success ratio, and average return, including the losses and the first target achieved, is 11.9%. The average holding period for these calls were 93 days, calendar days. So what are the stocks which we closed? These are the ones which have given us fantastic returns. ITD, Cementation, Talbros, Kirloskar Ferro, Saregama, about 30 to 25% kind of return it has given us in these span of 2 to 3 months. For the whole of financial year 24, the success ratio was 94%, 15.5% were the return, and 86 was the number of holding days. Jindal Drilling, Patel Engineering, these are the ideas which give us good returns. Now coming to technical performance. For April and May, the 86.6% ratio, success ratio was there for 58 positive calls and 9 negative calls for trading ideas in cash, and in e-margin about 73% success ratio, 31 positive and 11 negative, and most of this because of the election related volatility, because on that day most of the stocks which were open got stopped out. Considering that also 74% success ratio and 5.7% return per call, and average holding period is just 9 days. So MTF for e-margin April to May, despite huge volatility, we have been able to negotiate those things quite well. Now we are gradually increasing the number of calls, and hopefully we will have more and more trading ideas over the next 1 month where we'll be able to come up to the budget. So now to conclude, we have seen the extreme volatility. Most of the event related risks are over. Now we will wait for budget. Budget will drive the direction of the markets. The important thing is that the India is now going to attract a lot of global capital. From this month of June, Indian bonds are going to add it to the global bond indices, and post election we are expecting that if there are no negative surprises in the union budget, we are likely to see good growth coming in to the budget related positive stocks which are getting good policy kicker from the union budget. Otherwise, commodities and banking and finance are our preferred areas. We like there, we are expecting that a lot of opportunities are there. So that's it from our side. Nifty is likely to head towards 23,900, 24,000 levels. Banks are going to lead. Banks and financial and commodities are the area to look for. Mid cap and small cap will continue to do well. Capital goods and auto are the areas where you need to be cautious. So this is the outlook from our side. Now we are open to questions. If you have any questions, please put it into the chat box and we'll try to answer as many as possible. Depending upon the screen which you are using, you will have a question mark on your device. Press it, a window will open, and that window, once you put that question, it will appear on my screen and we'll try to answer. So there is a question from Nitish A, that why company is not adding multiple option buying in mobile app. We are all waiting, real-time chart view is not getting properly. So this is a question related to our platform, but I'll be happy that we have recently launched Insta options on our app. You can refer to the webinar which we did a couple of days back, and now you can buy multiple options using the Insta option on our website. Pratik Sharma is asking what sectors should we expect momentum. So we expect momentum in banking and finance. We expect momentum in commodities. Where we expect momentum to come down is in the automobiles and capital goods. IT is a tricky sector. The business which was, so this is a question from Akshata, that what is the outlook on IT. So the IT, the global capability centers are taking a lot of business, and they are the one which are growing quite well. The global companies who are outsourcing it to Indian IT services, companies like Infosys, Wipro, TCS, HCL, they themselves are so convinced about the business model that many of them are actually opening their in-house IT centers into India, and that is reflected into the growth of global capability centers and the growth of IT services exports from India. So our outlook for IT sectors is still very shaky. We are not very bullish on that. Sridevi Ramesh Gutula is asking what is the opinion regarding telecom. So telecom as a sector, we are bullish. There are three players: the Jio from Reliance Stable, Bharti, and Idea. Government policies are supporting companies like Idea and the telecom sector. I expect that there could be a revision in tariff in next couple of quarters. Once that tariff revision happens on the higher side, average revenue per user will start rising, and when that happens, stocks will continue to perform. So we like telecom as a sector for longer term investments. Bhakti Kamdar is asking about defense sector. So earlier, defense was a play, was a import substitution. So a lot of defense equipment were being imported into India from abroad. Government came out with the offset scheme and then Atmanirbhar scheme and other policy intervention to support making those things into India for Indian armed forces. Now, in the new development, recently the defense minister has given a target of 50,000 crore of export target to Indian defense companies over the next 5 years. So not only Indian companies will manufacture for India, they should also export it to smaller countries from now on. And that is the policy thrust, that is the policy we hope and aim. That's why we saw a sharp upside and a bounce and enthusiasm in defense companies. We think that this is a theme which is continue to do well over the longer term. So we continue to remain bullish on them. PS is asking about OFSS. We can't answer question related to individual stocks. Rohit Chopra is asking about stocks. So he has mentioned ABB, Siemens, Honeywell. So I can't answer stock specific question, but that is the space which is likely to do well over the longer term. MNC companies are likely to do well, but temporarily for next few months, be very careful there. I think the valuation has gone up quite a bit, and that sector is up for a correction. Somebody opened an account 1 month ago, but not had been allotted a relationship manager. If you want a relationship manager, you can go to a close by HDFC Securities branch or contact our call center, either from our digital channel or from nearby branch. You can avail the services of relationship managers. PSUs. So I'll hand over this question to Subash. Subash, what is the view on PSU sectors? Subash, are you there?
Yeah, so yeah, it is the last 1 week it was picking short-term trend with the trading upsides. And keep strict stop losses to control your risk.
Okay. Last question we'll take was on the gas sector. So there is a hope that the gas may come under GST whenever the new GST Council revision happens, a meeting happens. And if that happens, gas stocks, especially the CGD stocks, city gas distribution stocks, will get a leg up. Another possibility is that if gas is brought under the GST framework, the users of the gas, like companies in the ceramic sector as well as the chemical and fertilizer sector, will be able to take those costs as an input credit and may get benefit, and their 5 to 6% cost will be you reduce. So eventually 1 to 2% margin expansion is possible, and that will be huge for such a low margin business. So if gas comes under GST, CGD, chemical, fertilizer, and ceramic companies may take a very positively. So thank you all for joining. I think there has been a wonderful webinar. A lot of information has been shared with you. I hope it has been useful to you. Overall outlook for the market is bullish. Mid cap, small caps are continue to do well. We remain bullish. 24,000, 23,900 is the immediate target for over the next fortnight. The breadth is reducing in US market, so outlook in US market is little cautious, but otherwise we continue to remain hopeful for the market. Thank you all for joining. Thank you, Subash. Thank you, Siddharth.
Thank you, everyone.
Thank you, and we'll close this call.